What's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. You already know to hit the like, subscribe, and notification bell. If you're not already subscribed, welcome to the family. Hey, we are here. We try to make sure that everybody makes money here. I'm recording this a few minutes, like literally a few minutes just before the earnings. We will get to the earnings as they come in. I'm recording this in a linear motion, right? So what I mean by that is I want to briefly, very briefly go over the plays that we did before. So as you guys know, I did a SQQQ play, right? And what happened this morning, for those of you that did an SQQQ play, we were saved by something called a price action. So the price did not fall. And so I actually had two puts on the SQQQ. And I sold one right away at opening bell, and then actually it just came back up. So on that play, I was negative $42. Was it worth the risk for negative $42? Yes, I was saved because the market was green. I thought I was going to get hammered. The second play that I did was I did a put on Meta. Just like we said, I had a strong conviction. I'm looking at it because it's going to come live here. I had a very strong conviction that Meta was going to tank. So I did a put on Meta. So let's look at how that worked out for me. As you could see, so I made actually 300. You see where to the left where it says open P&L, I made 328% on that play. The 4 along with the 12, 13, 14, 15, 16, 16K this week, not bad, right? Now, someone left this comment, and I'm going to say this just before the bell. Someone left this comment, and it says, hey, Larry, look at the top there. It says, pretty much, are you becoming a day trader? All right. And I'm not, right? So I'm not becoming a day trader. I am just showing you guys that even in a down market, even with bad earnings, that you still could make money, right? So I just did a few plays. Now, we know we got Apple coming up, right? And a lot of people are expecting Apple to be negative. And I did not do an Apple play. And I didn't short Apple, and I didn't do a put on Apple because, now, would I do one? Yes, I absolutely would do a put and then turn around and do a call on Apple if I was going to play it. But I'm not, because I've learned from my mistakes and that is I had two killer plays. I'm going to chill, because what happens is you try to outdo what you did last time, and I'm not going to do that. All right. So you do you. Let me know what you guys are doing. OK, I'm also going to start doing the promos, which I have to do. I'm going to consolidate those down and try to do them in a 30, a 10-second spot. For instance, Moomoo, deposit $100. That's where we're cashing up, getting ready for the hard recession. You see that link. And then Webull, that's where we're DCAing, dollar cost averaging in. And then we're going to continue to do that over the next 5 years. I'm done. How's that, good people? That's the way we're going to flow with it, all right? I'm using both of these. Both links will be the two top links below. And we're going to move from there, right? Hey, let's get right into these earnings, and then we will discuss.
Let me point right to it. It is the guidance here. Q4 revenue guidance estimated at between, this is what the company says, guiding between $140 and $148 billion. The street was expecting $155 billion in Q4. This is the most important holiday quarter, so that is very light. Operating income, the street was expecting more than $5 billion. The company says to expect between $0 and $4 billion. So coming up short there as well when all the street is focused on costs. Amazon was supposed to have been working to getting this under control over the year, bringing in that extra capacity. In terms of the top and bottom line numbers, the top line is a slight miss here. $127.1 billion, $127.45 was expected. EPS 28 cents. I'm not going to compare that to the other number because there's a bit of funny stuff going on because of its Rivian investment, but it was, what I can tell you, is a $1.1 billion gain in Rivian. I'm going to continue to go through this, Scott, and I'll bring you numbers for advertising, for AWS, for all the rest of it.
So there we have it. Amazon down almost 19%. Amazon is plummeting, almost down 19%. It was a miss. It was expected. 127.45 was the estimate billion, and they came in at 127.10 billion, right? But what tanked it even more was their Q4 guidance, their forward guidance. And so that was not good for Amazon. Wow, that's just crazy. Let's talk about a few more things before Apple comes in a few minutes. Apple is going to come in. GDP was better than expected, giving us another green day today. And just so you guys will know about Meta, you know what? We'll talk about Meta in a minute. Let's go right to Apple.
Hey there, Scott. They are indeed. So we got a beat here on the top and bottom lines, but some misses within individual segments. Let me break it down for you. Revenue coming in at $90.15 billion versus the $88.9 billion expected. That's a slight miss. That's a beat, rather. EPS also a beat, $1.29 versus $1.27 expected. Now for those misses within the individual segments. iPhone revenue coming in light, $42.63 billion versus the $43.21 billion expected. Still up 10% year on year. Services miss, by the way, is another miss, by the way. $19.19 billion versus $20.1 billion expected. Scott, I'll have more for you in a bit, but that's the numbers to chew on for right now.
Tech is in a recession. Tech is in a recession, good people. We don't need anybody or some committee to tell us we're in a recession. Tech is in a recession and has been in a recession. Excuse me. Apple. So revenue was a beat. EPS was a beat. And earnings per share, for those of you that don't know. iPhones, a miss. Services, a miss. So tech is in a recession, good people. And the market is still green. This is what's crazy with all of this going on. So let's take a look. Apple is down almost 5% after hours. Look at that, almost 5%. Apple is down, right? Let's look at Amazon. Let's refresh. Amazon is tanking. Amazon is down 20%. So it was down 4% and down another 20% after hours. Look at that. Insane. And then let's look at Meta, right? Meta was down 24%. Another. So Meta is down 25%. Tech has tanked. Tech is in a recession, good people. And so, like I said, one of the things that's saving the market today is positive, better than expected GDP, gross domestic product. And so just think about this as it pertains to Meta. Mark Zuckerberg's wealth, right? His wealth, what he's worth, fell by $85 billion this year alone. That is insane. Insane. That's crazy. Crazy. So a third of the S&P have reported this week, and 40% of the Dow has reported this week. So that's what I wanted to do. I just wanted to bring you guys this info. Let me know if this type of thing helps you. I just wanted to, consolidate all this information. And listen, for those of you that think you're missing something, you're not. Okay. So when on yesterday, I made a video telling you guys what I was going to do about Meta. I was going to do this put. I made it before closing bell, so you could have partook of it. But what I want to tell you is this. Don't just wait. I'm never going to be that guy that just tell you, buy here, sell here, buy here, sell here, buy here, sell here, because that's not going to help you long term. If a brick hits me and falls on my head and I die, then you're done. I'm trying to teach you how to fish. So when I tell you stuff like keep your eye on the 10 and the 2-year bonds, right? When I tell you keep your eye on the dollar, right? When I tell you these correlations, when I tell you when the dollar is strong, the market is weak, right? And the same thing with the treasury bonds. When I tell you this stuff, you don't have to wait on anybody to show you what to do. You have it all. So I'm giving you everything every single day, good people, because I want you to prosper in this. So I'm going to continue to say this on every single one. I do see, and I call this one perfect. I do see, I'm not going to say perfect, but I called it because there's some things that I called the reason why this has happened. It was imperfect in the way that I called it, but I still called it that we were going to have this rally right here. I said mid-October, and here we go, right? But good people, this is a short-lived run-up. Don't get it twisted. Don't put all your money in right now, because what's going to happen, I believe, after Christmas and, these midterms, is political stuff in here too, that I believe that things will get worse, I believe, Q1 of 2023. So it's okay to build up. I sold some positions, but also cash up. Okay. So I'm not going to, continue to harp up on it. But if you don't have trading platforms, check out my top 2 links, deposit 100 in both. All right. I love you guys. We'll see you tomorrow. Leave me a comment if this information helps you. Live, love, laugh, and learn.